All right, so welcome to CPA Q&A. Today, I've got a question from Andrew, and Andrew asked me a question related to crypto. And so he said here, he said quite a few things when we spoke, but he said, I'm planning to do crypto staking on Ethereum. What should I be aware of from a tax perspective? So that's a pretty big question, but if you are considering mining crypto or staking crypto, then this is how your crypto will be treated from a tax perspective. All right, so pay attention if that's you. Now, I had a conversation with Andrew, and by the way, what I mean by that is on my website, navimuradcpa.com, Andrew booked a Q&A session with me. So we actually had a conversation about this, so I qualified all of his questions. So you could do the same thing if you want, or leave a comment if you're watching on YouTube or what have you, or go to my website. It's navimuradcpa.com. Shoot me an email with a question, and I may feature it on a CPA Q&A session. Anyway, so Andrew says, hey, I'm staking crypto on Ethereum, and what do I need to be aware of? Okay, so let's go to the whiteboard. I'm going to explain this for you. So every business has a couple components to it, right? So every business earns revenue, or it hopes to earn revenue, and it also has expenses, right? And the net of this number, the revenue minus expenses, is the profit in the business, all right? That's pretty straightforward. You probably knew that already. But let's define what these items are for Andrew, who's going to be doing staking. And when I say staking here, again, I confirm with Andrew what he meant by that. He's not, doing some sort of liquidity pool thing or anything like that. He's truly doing the staking activity himself, not in sort of some community or what have you. So how does Andrew earn revenue? Well, he's going to do, the crypto staking. Maybe that's a proof of work activity. I'm not in the crypto world as much as you might be, but that's what he'll do. And he will earn, let's call them tokens or coins, all right, for doing this activity. So let's say, I'm just going to make this up. Let's say he earns, each month he earns 10 Navi coins. Obviously I just made that up. I don't have a token or a coin. And each one of these coins is worth $100, right? So he has $1,000 in revenue. Okay. What I mean by this is for this math to have actually played out, he would have need to receive the 10 Navi coins all on the same day. Let me break that down a little bit. So what I'm saying here is the day that you receive the coin or token, it's whatever the fair market value is on that day is what your revenue is. So if the price of a Navi coin is fluctuating day to day, and he received these coins on 10 different days, then he needs to track all that. Okay, I know that sucks, but you need to track all that. But to keep things simple, I'm saying, hey, on the last day of the month, he earned 10 Navi coin, and on that day, Navi coin was worth $100 each. So that's $1,000, right? Okay, great. So that's his revenue. What are Andrew's expenses? So Andrew might have expenses related to energy costs. He might have a home office expense, maybe some cell phone expenses related to this, some internet expense for sure, things of that nature, right? So that will reduce his profit. So let's just say that gets reduced down to, just to keep the numbers easy, let's say that is $100, okay, for the month. So his profit for the month was $900, okay? Obviously, he's gonna do this every month in the year, and his numbers hopefully will be much larger than this, but that's how it works, okay? Now, what does he have to pay in terms of taxes? Now, Andrew happened to be in the state of Texas, and so there is no state income tax in Texas, right? So what taxes would Andrew have to pay on this? he would have to pay on the $900 two types of tax: federal income tax, okay, and what's called self-employment tax. That's SE taxes, okay? And so federal income taxes, how much would he have to pay? Well, that depends on what tax bracket he is in and what have you. I would say it's safe to say that he's probably in a 20% tax bracket. I'm just making that up. That's not what he told me or anything like that. But let's just say that was, 20%. And if you're in a state that has state income tax, that might be 20% federal and 5% state. So maybe it's more like 25% for you. But it's 20%. And he has to pay self-employment taxes of 15.3%. Okay? So I'm going to change the facts a little bit just to make the math even easier. Let's just say that he earned $1,100. 100 was his expenses, so this means his profit was 1,000. So he might pay federal income tax of 20% on the 1,000, right? So maybe that's 200. And then 15.3% on the 1,000. So that's, $153, right? I think that's the way the math would work out. I don't normally do public math like this, but that's how it works. So Andrew, or to anyone else there doing crypto mining or crypto staking, that's how the taxes work with that activity. Now, there's one really important thing that you need to consider here. Andrew now owns 10 Navi coin, okay? And so what happens is he now has an asset, or he has 10 of them really. He's got 10 Navi coin. If he doesn't sell them the same day that he received them, then he needs to track or keep a record of what is his cost basis in these Navi coins. So again, in my oversimplified example, I'm saying that these coins had a fair market value of $100 each. And so his cost basis in these coins is $1,000, okay? Again, this is if he doesn't sell the coins the same day that he receives them. If he holds on to them and they go up in value, let's say, because I provide a lot of value, Navi coins go up to $200, the price has doubled. Well then, and then he decides to sell them. Well, he needs to keep track of all that. So let's say he sold them a month later for $2,000, right? Well, he needs to track that, right? So on the day he sold it, he would look up the fair market value. It sold for $2,000. His cost basis, that's the $1,000, was $1,000. So his gain is $1,000. Okay, so he has a capital gain of $1,000. This gain, because he sold it 1 month later, would be a short-term capital gain. Short-term capital gains basically means that you sold it for a gain in less than 12 months. Okay? He would have a long-term capital gain if he waited over a year. Short-term capital gains rates are the same as ordinary income tax rates. So it would be the 20%. Long-term capital gains rates depends. It could be as little as 0%. That's probably not very common for most of you. Or it could be 15%, or it could be 20%. For most of you, that's pretty sloppy there, but for most of you, it's probably going to be 15%. Sorry, that just erased instead of writing. So 15% long-term capital gain, which would be better than the 20%, right? And if you can imagine, if Andrew was in a 30-35% tax bracket, he would much rather have the long-term capital gain tax than the short-term capital gains, right? So that's how crypto taxes kind of work. I hope that was sort of helpful. A quick recap: the profit on your business, you pay federal income tax, self-employment taxes, and state income taxes if you're in a state that has state income tax. If you keep those coins and you hold on to them and you sell them later for a gain, then that gain is a capital gain And if you sell it for less in under 12 months, it's a short-term capital gain. Over 12 months, it's a long-term capital gain with favorable rates. Now, what I want to point out here is if his profit was over 40,000, and there's many things that go into this factor here, but if his profit was over 40,000, instead of him being taxed and paying federal income tax and SE tax on the full 40, he could form an LLC for this activity and elect to have it taxed as an S corporation. I'm not going to get into all that here, but basically what that would allow him to do is to save money on the self-employment tax. Okay, what would happen is the 40,000 would get split into a salary bucket, and he would have another bucket where he might take distributions of profits. And really, the self-employment tax only applies to the salary portion. It does not apply to the distribution portion. There's a ton of other videos I have on my YouTube channel about S corporations, but in my opinion, generally over 40 grand in profit, start to consider the S corp, and you could save a bunch of money in the self-employment tax. Okay, so hope that's helpful. If you're mining or staking crypto, that's how the taxes work on that.